Ladies and gentlemen, we appreciate your participation in the tea break, and we hope that you now recharge your energy and so ready to join us for the next exciting sessions. Resuming our morning section, we will now explore a trend, a popular business association model that has garnered significant attention in recent years, bancassurance. Despite its nascent state in Vietnam, bancassurance is rapidly evolving and offering opportunity to diversify distribution channels for the insurance market, thereby contributing to revenue growth for both parties. Stepping into a new era where modern technology like AI and digital transformation increasingly prevail, bancassurance 2.0 present noticeable aspects to discuss.
Now, let's explore the hot topic, bancassurance 2.0, partnering for growth, given by a beautiful speaker from Switzerland, Miss Alicia, Innovation Manager of Life and Health Southeast Asia region. Let's welcome on the stage Miss Alicia.
Hi, good morning everyone. I hope you're recharged from the tea break. I also hope you didn't eat too much such that you will fall asleep in my presentation today, alright? Okay, so I'm Alicia. I'm the Innovation Manager for Vietnam in Swiss Re. And today I'll be bringing to you the topic of bancassurance 2.0. And definitely this is a topic that you may have already been hearing about in the news for the last 1 year. So I hope our sharing today will really bring you some sort of insights as well as how we move on from here. So I'll start off here that insurance, as we all know, is a product that is sold and not bought. So what this means is that, unlike other things that we buy in our lives, most of the time it is a want. We are driven by our own wants and we will actually make that purchase. But insurance, on the other hand, is most of the time when someone brings up that topic or that product, and we will actually have to think about it before we actually make that purchase. So this entire process and the drive to buy insurance is also called the propensity to buy. And this is something that is low, not just only for insurance within the banker channel, but insurance sold through other agents as well as other distribution channel as well. So when bancassurance as a term and a concept emerged in the 1980s, it was defined as selling insurance through the banks. And that concept actually makes sense and is still relevant today. A lot of our bankers in Vietnam, they also understand the synergy between selling insurance at the bank as well as their other bank services. Because the idea makes sense. Essentially, you're selling a protection product to someone who is also thinking of financial planning. And all this actually goes hand in hand. Which is why even today, based on the survey that we have done at Swiss Re just early this year, when we understand the sentiments of the Vietnamese community towards bancassurance, 88% of our bankers are still very interested and they find that insurance products are very attractive to sell. This may be due to different things such as the ability to provide their customers with a very holistic value proposition, the turnaround time in really servicing their customers, or even just commissions. But one thing we have found through our research is that even though the banks may be the very first point of contact in introducing and selling an insurance product to the customers, an alarming 72% of them actually eventually turn to their agents to buy these products. So to me, this number is actually very, very alarming, right? And does this then mean that there is just no further growth or no further potential in the bancassurance side? Or are there just some other challenges that we actually need to iron out and we can actually still move ahead and continue to grow this space? So of course, I'll cut to the chase. As you already know, my title is Bancassurance 2.0. We are partnering for growth. So definitely there is some potential, and this is where we want to share with you more today. So bancassurance is definitely still a growing distribution channel. When we actually ask consumers today who are already buying from the banks, and again, this this survey was done by Swiss Re earlier this year amongst everything that's ongoing. 85% of the customers actually still felt that they find their bankers that they have been engaging with, they thought that they are trustworthy, and they would actually recommend them to their family and their friends. Of course, if we were to look into the topic of whether they feel pressured to buy insurance, this is where the measure is a lot lower. Only a third of them actually thought that the bankers are acting in their interest and they are actually being objective. But again, this score that we see here is not just something that is relevant in Vietnam or something that is only relevant in the bancassurance. Because when we ask consumers the same thing and to rate their agents, even in Vietnam as well as other parts of Southeast Asia, the same trend also emerged, whereby people just don't feel that the insurance distribution channel is acting objectively. But if we were to put this measure aside and we were to look at the growth from here, the consumers today, more than half of them who are already buying from the banks, are actually still very open to buy from the banks in the future in terms of insurance product. And this again is still amongst whatever is ongoing. So definitely there is still that potential for growth, but we must not ignore that there are some challenges that we have also identified. So in our research, we definitely found a lot of different trends and information that we can actually address. But for today, I would like to just bring to you 3 key gaps and challenges that we know that we can help to address further. The first is product relevance to customer needs as well as bank services. The second is the financial literacy of the Vietnamese consumer segment, the education and training of the bankers, as well as the knowledge of the consumers themselves. And lastly, it is the mismatch in the preferences of underwriting process at the bank channel. So the first gap we have identified here is in terms of product relevance. So product relevance is actually a top concern and a top need in both consumers as well as the bankers. The bankers themselves, they know that insurance being sold at the banks must actually be tied to the bank services so that it gives them that compelling story to actually even bring up insurance as a topic and to actually bring this up to sell. So the very first recorded bancassurance product in the world is actually a mortgage-linked insurance that is actually distributed through a bank in Belgium when they were selling loans. And that concept made a lot of sense, which is why it is still very relevant today. And that is because when someone is in the mental capacity to actually take up a loan, they are also thinking about the case whereby what if something were to happen to them and they are unable to pay off their loan while they are actually building their homes. So that concept makes sense, which is why this particular aspect of ensuring that a product ties in with the bank service is one of the top concern and one of the top feature that bankers actually ask for when they want to have an insurance product on the bank's shelves. Consumers themselves, they are also very needs driven. So when they're actually buying insurance product, they actually really need to know that this is going to meet my needs. But today, based on the research that we have, almost half of the Vietnamese consumers themselves felt that the products are just not tailored to their needs. But you may be thinking, a lot of the products that we have now at the banks are also products that we distribute in the agency channel with some slight tweaks. So why is it that they're successful at the agents but not at the banks? And that is because we often forget the mindset that the consumers have when they're actually buying insurance or when they're actually looking for services at the bank. Unlike speaking to an agent whereby it is very purposeful and you know for sure that I'm going to be buying insurance and planning for my family and my future, at the banks, most of the time I'm there to either take up a loan, open an account, and if you were to push an insurance product at a point in time, it just seems odd. So the mindset is just not there for the consumers to feel that these products are actually tailored to their needs. Moreover, a lot of the products that we have today are actually designed to actually only meet individual needs, but not the other family needs, whereby consumers actually do prioritize covering for their parents and their children and even their spouse. So definitely, these are some gaps that we can address as well. The next challenge here is in terms of financial literacy. So despite all the efforts by our various distribution channels, whether it's the agents or the banks, they have actually been trying to really educate and talk about insurance more to consumers. But financial literacy still remains low. And we know this because, based on the research that we have, 41% of the customers actually felt that they don't receive sufficient information or education about the products when they are interacting with the bank staff at the point of sale. But surprisingly, if you were to see the next stat here, 78% of the bankers have actually reported that they felt that they are investing a lot of time at the start of the sales process. They feel that they are educating the customers a lot, they're actually doing a lot of needs and fit analysis. Yet, the consumers themselves don't actually see the results of this. And this actually points to the ineffectiveness of the education process, and perhaps bankers just don't have enough tools and resources to really give the right story to the consumers or educate them. Or it may just be a wider systematic issue whereby financial literacy is just low and people don't understand the need for insurance in their lives. Which is why no matter how much you try to educate a consumer on this, the success rate on this is just remaining low. The third gap that we have also identified in the market is in terms of the mismatch in the preference of underwriting. So this statement at the top here, right, simplify underwriting, it is not something that it's not something that's foreign to us. And a lot of times, we also know that simplified underwriting is preferred, or rather we think that it's preferred, and perhaps we are also partially right. And that's because, as you can just see here, the bankers themselves actually prefer to facilitate a simplified application as well as underwriting process. And that's because when you look at full underwriting, a lot of times this also have a lot of complex terms, a lot of documentation and paperwork, and the bankers may not feel equipped enough to help guide the customers through the process itself. Guaranteed issuance offer, on the other hand, is not as preferred, even though, as it says, you're literally giving the application form as a success to the consumers once they apply for it. But there are actually limitations in both simplified as well as guaranteed issuance offer. So in the case of simplified underwriting, we are often limited by the sum assured as well as the protection coverage that we can actually offer to our consumers. On the other hand, for guaranteed issuance offers, while a customer may be accepted, eventually their claims may be declined because of some other pre-existing conditions, and this is something that the bankers do not want their customers to have. But the consumers themselves are actually very flexible in the various underwriting methods. When given the chance to actually do a full health declaration, a lot of them are actually very willing to do so in exchange for premium discount or even higher coverage. So simplified underwriting is not always necessary, and it really depends on the mode of sale, the type of product, as well as how you actually interact with your consumers. But we definitely still want to recognize the challenges that the bankers have, which is a simplified process. We want to also bridge the gap that what the consumers want, which is a better offering, higher product, higher coverage or discount. And we want to bridge this too by still ensuring that we give them a very meaningful offer. So what I've just shared here are the 3 gaps that we have summarized based on our study. And of course, there are still many other things that we have found, but I really hope that you should just brought through those 3 gap areas and challenges, because today we also like to share with you 3 other ways whereby we can see how we can improve the current situation and actually close off this gap. The first is to design products that are of relevance to needs and customers. That's for sure, because that's literally our very first challenge in the market. The second is to simplify product selection as well as the onboarding process using data. And the third is to leverage on behavioral economics to create more real as well as meaningful experience when the customers are interacting at the banks. So creating products that are relevant to the consumer needs and the bank service actually kills 2 birds with 1 stone. You achieve 2 things. The first is a very meaningful proposition for your consumers. And the second is to help your bankers close the deal much more easily. With the breadth and the depth of data that we have at the banks, we can actually create very accurate profiling of the various customer segments and identify what are their needs as well as their gaps. Through these, we can then use those information to design more tailored products for them. For example, families who are expecting children, we identify them through their bank transactions, and we can actually target them with very tailored prenatal or family cover so that they can plan even further in terms of their family planning. Tying in with bank services, this was something I mentioned as well. And this is important because, like I said, bank assurance, the first product was a mortgage-linked insurance product. And that is still something that is relevant today. So what else can we actually offer that we can also leverage on the same concept? So how about boosting the coverage of working adults? Those who are opening bank accounts, constantly crediting their salary through the banks, we can offer them boosters as well as an income protection plan. Those who are paying off their school loans or their school fees, we can offer them savings plan or even a disability income plan to plan for their future. Or how about a preferential offering for your mass affluent customers who are very loyal to the bank? You want to keep them there, but you also want to give them something that is valuable. Tying in all this to the bank services, like I've also shared, really puts them in the right mindset to actually make the decision, and it also helps your bankers to be a lot more comfortable in actually even bringing up the product and bringing up the topic to your consumers to introduce to them. Lastly, it is also to simplify. Simplify does not mean removing the features or the benefits, but instead, we look at how we simplify the presentation of the product to ensure that it is relevant, it is using layman terms that is relatable to your very daily lives. The next item that we can also look into is to see how we can actually simplify the selection as well as the onboarding process using data. So like I've shared earlier, the banks are investing a lot of effort and time into the education process, the product selection, and needs analysis, but the consumers are not feeling it. So we can actually address this area in two ways. The first is to come up with something called the predetermined selection framework. So leveraging on the segmentation that I've mentioned just the slide earlier, we know the gaps and the needs of various profiles of customers. This particular pool of information can also be provided to your bankers so that they have that information and the list of consumers that they know they can target, as well as introduce specific products to them. Within this framework, we can also include a next best offer, such as those who may not be eligible because of underwriting. They can then be offered something that we know for sure that they will get accepted, while they actually still benefit from the coverage. The second area that we can look at is data-driven underwriting. So leveraging on data, such as credit scores or other form of information at the bank, we can actually use this as proxies to a person's health. So for example, someone who actually recently bought a new house, they are also likely to be in a much stronger financial position. They will need to have protection plan, and they are also likely those who are able to be in a very good physical health to think much further into the future, and hence, it shows us that their health status is also in a much better condition compared to others. This is where we can actually target this group of people with a much better offer, or to actually simplify the underwriting so that they don't have to do a full lengthy declaration just to get the product. These two approaches here actually aims to reduce the friction for the bankers to upsell the product. So this means that they know for sure what the customers need. They're actually not burdened by just the needs analysis whereby the consumers felt this is not done well. And they're also more guaranteed of a better acceptance rate in terms of the underwriting process. So this gives them a lot more confidence in also bringing up the product to the customers because they know for sure they will actually be eligible for it. Now, on the same topic of underwriting, what we have today and what is also preferred by the bankers is simplified underwriting. And what I have here are sample questions. I'm sorry, it's a bit small, but there are 3 sample questions that we often see in the market when we talk about simplified underwriting. So I'd like you to take a look at these 3 questions here and ask yourself, How many of you can actually answer these questions confidently and know for sure that I'm not holding back any information? So, at least for myself, when I look at question 2, have you ever had 2 consecutive weeks off due to sickness, injury in the past 12 months? Immediately, I'll be thinking back, oh no, what about that fever that I had a couple months ago? It's a sickness, right? Or I actually sprained my leg just earlier this year. That's also an injury. But if I were to say yes to this, then I'll be declined of a cover. But that's so insignificant. Unfortunately, that's how simplified underwriting actually works. It's either you give all no and risk non-disclosure, which you don't know, or any yes and you immediately get decline of the policy coverage. So how can we make this process, this simplified underwriting process, a lot fairer to come up with a decision at the point of sale? And that's where we can actually leverage on more automation as well as something called reflexive underwriting questions. What this means here is that we look at the current state of underwriting. We actually layer in further clarifications. So going back to question 2, if I were to say yes to any of this, the next level of questions will be asking, what exactly were those symptoms? Were they something one-off? Were they something acute? And based on all this other information that I provide, I will then be accepted or declined accordingly, or even loaded accordingly. What this does, it really balances the expectation of both the bankers as well as the consumers. Consumers who are more willing to give information, their needs are met, and they can actually get coverage or even a higher level of coverage. Bankers are now supported with the guidance that they may not have and may not be able to give their consumers when they're actually facilitating a simplified or even a full underwriting. And the last thing I'd like to share here today is how we use behavioral economics to create more real and meaningful experiences. So buying insurance often comes out with very good intentions. Even as someone selling it, you also have good intentions, but these may be understood wrongly, mainly because there's always uncertainty. Buying insurance is complex, and sometimes there's just really a lack of trust on whether you're working in my interest or not. Or maybe there's just too many options. So for example, someone who's, again, planning for a family, I want to actually protect my family members. I have very good intentions on that, but I'm not actually willing to act on it because I don't know whether the product that you're recommending me is good or not. And that's where we use behavioral economics to look at that real driver to buy the product in the first place. We can look at how we actually smoothen the entire purchase process and ensure that and reassure you that you're actually making the right decision so that you actually go through with the purchase intention. Okay, so Bancassurance 2.0. I think as you can see by now, I'm actually coming to the end of my presentation. It is not something that is going to be revolutionary. We're not trying to change the entire industry. And that makes sense because bancassurance is a model that works. It has been working so far. It has worked in other markets. But how is it that we can move on from here to make it even better? That includes designing more tailored and relevant products. How we simplify the product selection and onboarding process at an environment that is already very complex, such as the banks. And how can we ensure that customers will always have that meaningful experience and are not pressured to buy or do anything that they feel uncomfortable about. And that's what we want to do, to partner for growth with your consumers, your bank partners, as well as the insurers. So with that, I come to the end of my presentation. Thank you.
Thanks, Ms. Alicia, for your interesting speech. Should you have any concerns related to this speech, kindly send it to the organizer and we will send it to our expert afterward. Once again, we would like to thank you, Ms. Alicia, a representative of Swiss Re, for sharing with us today. May we invite you to remain on the stage, and we would like to welcome Ms. Đào Hồng Hạnh, Chief Risk Officer of Prudential Vietnam, representative of organizer, to give appreciation flower to our guest speaker.
Please give a big round of applause. Give a big thank to Ms. Alicia for your great information today. Thank you. We also would like to thank Ms. Da Hong Han. Now, ladies and gentlemen, ESG stands for environmental, E, social, S, and governance, G. It is a set of standards used to measure the sustainability of and social impact of the company's business activities. And today, several major global economies are promoting ESG criteria to enhance environmental quality and social equilibrium. Non-financial factors like ESG have a significant financial implication, as investing in ESG principle means the business is committed to sustainable development. To meet the objective of growth and market expansion, companies will need to adapt to this trend. That's also our discussion topic, unlocking sustainable growth, ESG application in life insurance.
And please welcome our panelists to the stage. Mr. Trần Thanh Phong, Chief Marketing Officer from Prudential Vietnam Assurance. Please welcome Ms. Elena Quick, Head of Business Development, Southeast Asia of RGA International Reinsurance. And please welcome Dr. Doug Nieder, Regional Director of Gen Re. And welcome Mr. Evan Lee, Head of Pricing Life and Health, Re Southeast Asia and India of Swiss Re. Please welcome our panelists to the stage. And now, the stage is yours.
Thank you. And now we would like to leave the microphone to Mr. Fong, your host today.
Good morning, everyone. I think for the past few years, we probably heard about ESG a lot, and it becomes a buzzword for like in the discussion of at strategic level and also at group level. Unfortunately, up until today, I think ESG is still a buzzword. It is not a lot of actions that's following up with that. Now, I would like to refer to one of a very good report that I got from PwC called "From Ambition to Impact" about ESG readiness for Vietnam. So far, Vietnamese government has laid a very good governance foundation for ESG for businesses to develop. In terms of social, we have a consumer protection law in this year, decree on personal data protection, law on banking and finance institution, and labor code in 2019. For environment, we have a power development plan, PDP 8, national strategy on climate change to 2050, environmental protection law and guidelines. And on governance aspect, we have a steering committee on COP26 commitment, the MOF guidelines on disclosure of information on security market, including ESG related. Law on investment, disallowed extension of an investment project, still using obsolete technology. So we can't say that we don't have enough framework on the government side for ESG to, for business to start deploy the ESG into our operation. However, interesting enough that majority of company does not have sufficient action on it. For instance, only 24% have a clear governing structure. 71% lack understanding of data required for reporting, and 70% have none or very limited external reporting on ESG. Now, for the very first question, I would like to ask Elena, are you surprised by the data? And have you come across enough ESG topic or discussion during the in-business meeting and with insurance?
Thank you, Phong. Yes, I think you are right. There are efforts done in ESG space, but is there enough, right? Although, yes, some companies may have a framework and a clear 3 pillars, and the actions against 3 pillars. Typically, we ask ourselves, why are some ESG more at front and some not so much? Could be because who are you accountable for? Or why are you doing it for, right? Is it the customers, the end consumers, the investors that you're accountable for as well if you're listed, and so on and so forth. But I think as business, contributing to the community, we have a big role to play and a big responsibility to take it forward. It's not just a theme that comes and go. I mean, it started with green, go green several decades ago, those who belong to the same era as me. And then it became more green, and then pollution, and now ESG, which is a more holistic view of being sustainable for a future. So maybe if we look at the business development itself and in Vietnam, I think starting with here, actually many years ago, at RGA we also started ESG, or more of infusing the social pillar into a product. And that was in 2019. It was an inclusive product, and I'll be very happy to say that we supported and built that framework for Vietnam. It's first at that time, 2019. It was a diabetic product for customers who are already diabetic patients. And it is conclusive and promoting for them to get protection. So without the way we underwrite and onboard them and price it reasonably, such that it's still attractive for them to take it on as protection, they would not be able to buy a critical illness product and coverage. Yeah. So for such customers, we learned that they are very aware of the protection gap they have. However, they know they cannot buy. So that is immediately a gap they foresee, but they're underserved. Yeah. So bring it forward from 2019 to today. By the way, that product was called Sweet Care. So I thank AIA for working with us then. And more recently in ESG elements as well, of supporting the family social structure, we have infused a first-in-market family floater benefit in a Sun Life medical reimbursement product. So again, that provides the family to have and share in the limits of a product. It's a bit of a family pooling concept. So the market has put in place a couple of initiatives addressing the social aspect, but I think a lot more can be done rather than systemically one or two products here and there. One element that I still would call out that I feel is largely underserved is the aging segment. Yeah, so the seniors, as we know, aging population itself can have a very strong strain on our economy, on the family social structures. I think as Asians, we hold the family very true to our heart. They are very important and key priority. If any of our loved ones are not well or need more support, immediately the family will feel it. So the silver segment is definitely something that is urgent, I feel, is an issue that we should be looking into and helping to support more. And allow me to share a bit more of insights why silver segment. Vietnam, as we looked into it, World Bank, is the fastest aging society, taking only 20 years to turn from an aging population to an aged. And that was from 2015, it entered into aging, and 2035 as aged. Yeah. So it measures by the percentage of population that are above age 65. So once you go into more than 7%, you're in the aging. I think you go more than 15%, you're in the aged. And how does that compare? Why is it called fastest? Because it compares with Japan. We looked at it. Japan, we know that Japan have a lot of aging population, right? However, it's even faster because Japan takes 25 years to go from aging to aged, but Vietnam is at 20. And the US is 69 years, and the one that's very long is France, 115 years to get into aged. So just some statistics to call out why is this silver segment, something that we may want to start looking and planning for it. Also at RGA, we were interested. So in our client seminar this year in Vietnam, we did a poll. And we asked our participants, which is you guys, right? And asked, who would you rank as in order of importance from your family? So we had the children, the family, the spouse, of course. But what ranked high, of course, is the children. But almost as equally high is the parents. And then lastly, to our surprise, is the spouse. So we're thinking, why is spouse not important? But we realized that they said the feedback was because spouse, they are independent, rather independent, mostly they may already have protection. So very aware, again, the parents are the ones that are not covered, right? So just one number to call out how massive this opportunity is 17 million. To summarize that, 17 million is the number of additional seniors Vietnam will have by 2050. So that's a huge opportunity if you are looking at what your business plans will go into. So I urge the actuaries, the regulators, who can influence the social pillar and in supporting protection for the silver seniors and infuse into the business plans. And this will definitely go into supporting government's plan to increase life insurance penetration from 11% to 15% by 2025 and 18% by 2020. So we definitely look forward to that. I think there's a lot more we can do as an industry together.
Thanks, Elena. By the way, can I have another mic out here, please? So you just mentioned a very interesting target from government saying that by 2025 we need to at least penetrate 15% and 18% by 2030. And it took us 20 years to get up to 11%. So on average, 2 years per one extra percentage of penetration. So the next question I would like to ask to Dirk is, so since we still have a large uninsured population, how do we prioritize and what group of customers should we put first?
That's definitely a very good question. I mean, it depends on what is important to you to focus. So when we look at the healthy life, actually there's a large group of uninsured people who have not yet purchased insurance for several reasons. And when we look at the characteristics of these people, we see that they're typically coming from a lower income group, that they have less education, and they're struggling actually with this onboarding process where you have to answer 10 questions which even an educated person typically doesn't understand. So if we want to do something for this group, I think we actually really have to look also at tax incentives. We may have to look at government incentives to help them to purchase the products. And something which is very important is education. So we really have to explain to these people that looking for coverage now is highly important for them for the future. And actually that's also something which I currently find very interesting about this conference, because these themes which we just mentioned actually have been there in the previous presentations as well, not under the heading ESG, but when you listened to this, actually the same elements in the end came up. And therefore for me, when we are talking about the healthy, uninsured group of people, the onboarding process is one of the key issues which we have to address. Because if you go to a person who is already struggling to pay for the premium and you have to explain him actually how difficult it is to purchase this policy, it's not going to happen. So we actually have to find here good solutions to make it possible. So this is a large group which you have, but then on the other hand, you actually have a smaller group of people with disabilities. And not only about the people with diabetics. Actually, diabetics are very often mentioned, and we have seen solutions for diabetics in many markets, whether it's Korea, Taiwan, Vietnam, South Africa. It's the first group people think of, but there are many other people with mental health. They're equally important, and here we really have to see. They're actually highly aware that there is actually a need, because they need the cover, but often they cannot purchase this. So here we actually have the challenge, how can we design the products? And how can we design the underwriting processes in a way to actually make it a sale? And some unfortunate news is, or experience is that these products are hardly sold, or hardly purchased, I think we should better say, for various reasons. And I think we still have the challenge as actuaries also and as insurance companies to make it better accessible for people out there with these disabilities. So I think I don't want to prioritize what is in the end better. It also, we have many insurance companies operating in this market, and I think every company in the end has to see where is their specific focus, and I think that's also what makes our society good. Everybody is good or better in a certain field and can contribute better to a certain development.
Thanks, Dirk. Yes, Ivan?
So I think, okay. Maybe I can also supplement on this part is how we are able to do it in a better way by sharing some of the example of other countries are doing. I think to support them, to increase the penetration, I agree with Craig that the lower income groups with someone we need to focus, but there's always a difficulty to reach those people. One is their affordability, and second is how you are able to reach them or to make them to understand the importance of insurance. So in this point, the government will have a very important role to play. Just to share with you two examples, for example, in Malaysia, the government are doing a scheme with private insurer to provide a critical illness and hospital cash cover, a very small cover for the people, the income group below the 40% of the population, something like. So it covers quite a huge population, and it's also free for the consumer. And the role of the insurance company there is they will help to manage the claims and also to monitor the experience. So that's how the government and the private insurer can work together. And also another example is in Singapore. So I think previously they also mentioned that Singapore actually they got this called DPS, a Dependent Protection Scheme. It's a very low-cost insurance that promoted by the government. The government tried to bargain with the direct company to have a tender so that they can offer a very cheap rate, cut through all the distribution costs, and then to offer a very basic mortality cover to all the citizens. So that scheme, actually Singapore is around 5 to 7 million of people, but that scheme also covers 80-90% of their population. So you can see the importance of the government playing this role in here.
I would like to zoom in a little bit on the silver group. If like majority of us here probably like heard enough on media that Vietnam is a very fast aging population. We currently still okay in sort of like the golden population pyramid. However, probably in the next 15 years, we will become a very, very, we old before we get rich. That's the title. Now, that's the interest that we've been doing a lot of awareness, campaign from Prudential side. But I would like to ask you, from your expertise area, what is the challenge in order to provide protection for that kind of group, and how the actuary society here need to be prepped in terms of preparing for that trend in the future?
I'll give that a go. I think similar to what Nam was asking today, right? How can we get there? Yeah. So I think key thing is, with all the brain power we have here, really, the actuaries and senior management and regulators, I would say start from the basis of affordability, because we know this segment, if you are not just diabetes, there are 4 highs, right? Your chronic conditions, high blood pressure, blood sugar, weight, high BMI, etc. So with all of that in mind, affordability has to make sense to a customer, right? Because if you do something that cannot sell, then it's not going to benefit anyone, right? So affordability and underwriting. So I think those 2 key factors are very key, really key in balancing it, right? So underwriting, you need to make it an ease of onboarding. So you need to have the risk mitigation or the questions that perhaps can address and target for the conditions that we know the end customer needs. And the affordability has to work for both, not just customer, but the distributors. Because if the distributors, like my colleague shared, right, the journey, oh no, Mr. Customer, you got a lot of health conditions, I'm not going to cover you, it's too much of a hassle, right? And then he's just going to push another savings product. So affordability and underwriting, the onboarding process is crucial to make it successful. So I think just start thinking from there and then pushing the boundaries and having the risk appetite to do so. Is it from one company, or is it a wider, societal approach? That's something to be considered as well.
If I may build on this, we are, for the silver products, we are struggling with one big problem. When people are young, they don't purchase it. When they are old, many don't qualify. So I think what we need to help people to understand is that they need to purchase this product when they are young. So then actually the underwriting process, it can actually be very easy. I mean, in Korea, there are a lot of dementia products which actually have been sold with very little underwriting. And Korea actually has also found solutions to make it attractive also at an older age. So I think we really have to find solutions to make it possible to understand and to purchase this product at younger ages. Because when you wait too long, it will be too late, or it may be too late.
So, question to Ivan. Now, with that trend, is inevitable, and also a lot of things is happening in environment in terms of the activity and the pollution and things. How does that change the pricing strategy, and what kind of impact that we should prepare for?
Well, that's a million-dollar question. Asking how are we able to project the future rates, right? So before I start the details, I just quote one comment from WHO. So WHO has commented that overall, the climate change is projected to have a substantial adverse impact on mortality, despite the action that we may take in the future. So it means in the past, if actuarial trainings, we always use the historical experience to project our future. But actually, there are some elements may be changing fundamentally that are affecting our forecast. There's a few key trends I can highlight here, and we can also discuss as well. Talking about climate change, there's a three key trends we can look at. The first is the heat stress. So climate change, we're talking about it's more like you can also talk about the global warming, that the earth is getting heated, and how it will affect our mortality in a several way. For example, the old people, if they don't have a proper cooling at home, it can also easily to trigger higher cardiovascular risk. So it can increase the mortality. And also global warming will also create a more frequent pandemic event like flooding or tsunami, which can cause catastrophic losses. So that's the key trend one. The second key trend is global climate change will also increase the chance of the infection disease, because the carrier of those infection diseases are more likely to live or to spread to other area where it was used to not in that area. Actually, maybe COVID is not due to this kind of global warming, but it is exactly showing how an infection disease can impact our life. So that's the second area. The third area is the air pollutions. So the climate change will also increase the chance of wildfire or other, or also the industrialization also have a more emission of the air pollutants, which have direct impact of several diseases. For example, the lung disease or other respiratory disease. So all this is slowly changing. So it's a question for us right now that if we are observing in the past, we always seeing mortality improvement, which is due to medical advancement of the breakthrough of different medicines and also improved lifestyle. But going forward, this may be continuous, but at the same time, we are also facing the challenge of climate change. There's a question for us right now that our rates are sustainable for the futures. So it's a very important question for all the actuary here.
So with all of those achievement or KPI that we wanted to achieve, and the trend of environmental changes and also aging population, what other changes we need to be aware of or prepare in terms of governance in order to meet those demands?
Maybe I can try
Yes,
this
please.
one. So I think ESG is a very holistic topic. We're talking about, pricing may be one part of it. The social responsibility is another part, how we can serve the underserved market. And more importantly, as a corporate, we may need to have a more clear strategy, what we want to achieve at the end of the day. So it covered our investment strategies, and it may also cover our corporate strategy, like how internally we can reduce the carbon production. So kind of different things. So you can also see what the other country they are doing. So it starts from the government side. So the government will have a different framework to try to encourage this ESG, and then we'll go to the corporate side and how they can also incorporate those framework. So it starts from the very senior people, the board of directors need to be aware of this, and then pass to the middle management, how they can execute it, and then to our working level, how we are able to reinforce all the measures that we are talking. So as maybe as an actuary, it looks a bit far from an angle, but in fact, it will affect our day-to-day work as well. For example, the risk management framework, how are we able to ensure our compliance of those guidelines from the government? That's the important part. And also, as I said, the pricing part of the future, how we are able to adjust the climate change impact. That can be another angle of looking into it. And also that you can see there are lots of government, they are also promoting those, on top of the government, they are also talking about the scenario testing or stress testing. How are we able to ensure we have enough capital to cater those unfortunate event or pandemic event? So those are the work that we are going to see more and more coming to place in the market if the government are very keen on this topic.
You actually touch on a very interesting aspect of ESG. When we are looking at ESG, I think most people have a good understanding of what is E, environment. So reduction of carbon emission and everything. When you're talking about S, social, everybody has a good understanding. Yeah, social, we know what it is. When we're talking about G, governance, many people draw a blank. And I have understanding for this because, I mean, it is a different concept and possibly most challenging to follow through. So in our company, actually, governance goes very much with code of conduct. So we have a very detailed code of conduct which stipulates what actually the company expects from us as employees. And in the end, well, our work as employees in the end also contributes to the work which we are doing and which we ultimately also deliver to our clients.
I think definitely the governance needs to come in. It's all a part of a framework. Otherwise, you'll just be setting aims and goals, but not really acting on it, right? So governance is important to ensure that the cycle is complete. And then to have actually the ethics board, to actually have the steering committees for the different pillars to actually see those through. Yeah, and putting that as part of either your company scorecard, your KPIs down to the employees themselves. For example, social, within our corporate companies, DEI. How do you implement that? How do you compensate individuals for that as well, right? So it needs to really flow through and go down to everyone so that it can be an effective ESG strategy. Yeah.
Thank you. So in order for ESG is no longer a buzzword, but actually be put in practice, what advice or recommendation from each of you to the Actuary Society here so that we can start, for next year, we will proudly have some achievement to share instead of just talking about the buzzword.
Okay, I'll go. I mean, we ourselves as life insurers, even when I started looking at this topic, I said, well, I feel like we're in the back burner of it. We're only certain pillars. But when we think further, and we think of how large life insurers are, and how large of the amount of, capital reserves that we hold, and that we invest on behalf of our shareholders and policyholders and customers, we actually have a strong mandate and a strong opportunity to send the message through our investments, through our actions. Because actually we are not on the back burner. We're at the front line of it. It's what we do with our plans and what we do with the monies that we actually are safeguarding on behalf of policyholders and shareholders. Yeah, so I think there's a lot more that can be done. I just want to share a bit more, other than thinking of just social, of certain things that we have seen in the market, sharing beyond Vietnam. Let's say in Singapore, we've got Great Eastern Life that came up with a product. It's just a green product. It's a single premium endowment, but it says that the investments is in green investments. Yeah, and then we've got Hong Kong, Phu Thong Life, where if a customer buy a policy, the company grows a plant. So grow a plan for buying a policy. So the company commits itself to do that. Yeah. So things are, there are a lot of inspirations around, very neighboring countries. No need to look too far. That are feasible. Is whether do we put it in our plans and do we think enough of it, in our execution, yeah, of our business planning. Yeah.
Actuaries are trained to analyze problems and to project future cash flows into the future, to look at the solvency of companies, to do risk management. I'm convinced we are doing this very good and very well. But we are also actually trained to come up with solutions, to look for solutions and to address problems. And I would actually challenge ourselves a little bit. I mean, I earlier heard this question, what about universal health insurance? I mean, when we are actually selling a health insurance policy, there is a certain group of people who don't pass the underwriting process. Now, we can actually argue, okay, that's a small group of people, but actually they are not so small and they are also important for the society. And this small group of people also can make a lot of noise, which actually can have a negative impact for the insurance industry overall. So just an idea. So what if we challenge actually ourselves and we try actually to find a solution to make actually also for people who have to be declined in such an underwriting process to find a solution. So this could, for example, be an approach to say, okay, we actually have a basic health insurance policy. So then actually, yes, everybody knows that if I sell a health insurance policy and I insure people who are very sick, I will make a loss. So therefore, having the policy itself will not be the solution. So, but then we can put a pooling process on top, where actually the certain negative experiences will be pooled among all the life insurance companies. So I think we have to make it bigger, not only talk about in the context of our own insurance company, but for the industry. How can the industry find a solution? And I believe that actually actuaries are well suited to make corresponding solutions and to come up with proposals. Yes, we certainly will also eventually need the support of the regulator and the government. I think the initiative can come from our side.
Yeah, I will also similar along that line that we are insurance company and also reinsurance company. Actually, we are big cooperation. So actually, we should have our social responsibility here. So of course, we need to answer to our shareholder to policy that deliver profit, deliver new value, enforce value are important of our KPI. But at the same time, don't forget, we are also part of the society. When we take, hopefully we can also give back something. So just take the example of the Malaysian case I mentioned. Actually, that direct company, the government are helping to do the promotion or to do the scheme. But actually, the funding money from that direct company. It's showing that they are willing to sacrifice some of their margins for the good of the society. So it can be also a way that, as an actuary, I think we have a much value added here that we can, if we are allowed to have several buffer of several money to design a product for those people they are not able to afford the insurance or those have other issue not be able to buy the insurance, then we can see what is the best use of that money. On one hand, we can find the solutions of it. On the other hand, we can also do a bit more calculation, how to mitigate the risk, so it can help to optimize the money that we may have. So it's also a very important, we can think about our social responsibility.
Thank you, panelists. I think we cover all three aspects of ESG just now. So now the floor is open for the audience. Who wants to have questions to any of us here? Can please raise. Or if you are too shy, then you can just send it by notes and then we can respond it later. I guess that's about it. So thank you very much, Elena, Dirk, and Ivan, for sharing your valuable insight and experience so that we know, hopefully, that this time next year, when we get together, we have some tangible evidence on ESG development to share among the actually society here. Once again, thank you very much.
Thank you very much.
Thank you. Thank you.
Thank you.
So thank you so much, Mr. Trần Thanh Phong, for your great host today. And we also would like to thank our panel. We are so grateful to learn the expert, insightful perspective and practical sharing. Thank you so much. Please give them a big round of applause for the great information today. Thank you. So our beloved attendees, our morning sections has come to a close, and we will resume our afternoon agenda at 1:30. Would like to repeat 1:30 p.m. We kindly ask for your presence before 1:30 p.m. to take your seat. Once again, we appreciate your punctuality to ensure the event's smooth flow. Thank you. And now please enjoy your lunch, and we will see you at 1:30 p.m. in this ballroom. Thank you.